Crypto market signals go bearish, but long-term investors still accumulate. Many of the key crypto market indicators have turned bearish during the past few weeks, with the last month bringing historically large declines by most on-chain activity metrics, according to on-chain activity and digital asset flow data. That said, it's still the new entrants who are selling, while the hodlers continue accumulating. James Butterfill, investment strategist at digital asset investment firm CoinShares, said that investors remain cautious on Bitcoin, BTC, but that Ethereum, ETH, and altcoins remain popular. In its latest digital asset find flows weekly report, CoinShares said that $94 million has left digital asset investment products last week, but only one product provider witnessed significant outflows, while the rest saw inflows. Additionally, the weekly BTC investment product trading volumes fell by 62%. The report stated that Bitcoin outflows totaled a record $141 million last week, and were equivalent to 8% of the net inflows this year. On the contrary, ETH continues to be a popular choice among investors, as the asset saw inflows of net $33 million. Additionally, Arcane Research said today that the contango for the 3-month Bitcoin futures, or the difference between the futures price and the expected spot price, is now almost gone, and the spot price and the 3-month futures contract are almost trading at the same price. A report by crypto asset on-chain analytics firm Glassnode noted that the supply held by long-term holders is continuing to accelerate upwards, while newer entrants are letting go of their coins at a loss that is much larger than the market on average. Per the report, the market remains uncertain, following large falls in on-chain activity, settled volume, and transaction fees, for both BTC and ETH, returning them to the 2020 and early 2021 levels. By almost all on-chain activity metrics, the recent month has been a historically large decline, transitioning rapidly from booming on-chain economies at ATH, all-time high, prices, to almost completely clear mempools and waning demand for transactions and settlement. What's more, the USD-denominated transfer volume settled via the Bitcoin network fell 65% in the last 2 weeks. As other metrics, this one too is similar to the 2017 bear market, Glassnode noted, when on-chain settled volume fell by 80% in 3 months. Ethereum USD denominated transfer volume fell by over 60% during the last 2 weeks, compared to 2018's -95%. The fall in on-chain activity has also led to a significant decrease in the network fees for both blockchains, returning to mid-2020 levels, Glassnode said. The 744K BTC that were withdrawn to cold storage, or equivalent, over the last 14 months, 78% of them have remained unspent despite this recent volatility, the analysts said. The slowdown is not limited to BTC and ETH, as the aggregate on-chain activity like on-chain transfers and USD value moved for Compound, COMP, Aave, AAVE, Uniswap, UNI, and Yearn. However, per crypto intelligence firm Coinmetrics, BTC still leads on the Chicago Mercantile Exchange, CME, a preferred destination for institutional investors. Although it appears retail investors trading on exchanges like Binance and Coinbase have favored ETH over the last month, it appears that institutional investors are still favoring BTC, Coinmetrics said in their latest report today. Meanwhile, a recent survey conducted by Goldman Sachs suggested that institutional investors are not keen on investing in Bitcoin. During 2 CIO, Chief Information Officer, roundtable meetings, attended by 25 CIOs, the survey showed that their least favorite investment was Bitcoin. Besides, Bank of America's Global Fund Manager survey found that 43% of the surveyed investors said long Bitcoin was the most crowded trade in May. At 14:14 UTC, BTC is trading at $32,412 after it fell almost 11% in a day and nearly 14% in a week. ETH dropped over 13% in a day and almost 11% in a week, to the current price of $2,418 US. Weeks of sideways trading ahead as Bitcoin newbies panic selling to hodlers.